At the end of the day, it's both. I mean, that's the beauty of franchising, which is you basically have to find both pieces of the puzzle, but you get to have these great brands, often iconic, with standardized processes and controls. But then on the other side, you get to partner with world-class entrepreneurs, multi-generational families. And you're right. You need both. The brand is necessary, but not sufficient. And, the opportunity to kind of be in both those types of ecosystems all at once is one of the things that, we just find, really, really appealing about franchising.
What goes into an investment in one of the country's fastest growing restaurant brands? Hello, this is Jonathan Mays, editor-in-chief of Restaurant Business. And in this week's episode of A Deeper Dive, I speak with Scott Romanoff, the co-founder and co-managing partner of Franchise Equity Partners. Franchise Equity Partners is a long-term investor in multi-unit operators of all types and recently made a big investment in 7 Crew, a 50-unit franchisee of the rapidly growing beverage brand 7 Brew. 7 Brew has been one of the fastest growing restaurant chains in the country and has been a leader in the growth of drive-through only beverage brands. We talk extensively about that. We also wanted to talk with Scott about its investment in the franchisee in this case and other elements of that deal. We discuss what made 7 Brew and the operator such an attractive investment. We talk about the deal and how much work Franchise Equity Partners put into it before making the jump. We also talk about the challenges over the past couple of years and how that has changed the equation in restaurant investing. We're talking investment and 7 Brew on a deeper dive, so please check it out. Okay, I am here with Scott Romanoff. Scott, welcome to the podcast.
Thank you for having me.
All right, why don't you tell us a little bit about Franchise Equity Partners? Let's start off with that.
So we're not actually a fund, but we are a company with permanent capital. So we have no crazy time horizons and the like. And we specialize in what we call multi-unit retail and last mile distribution businesses that Amazon can't disintermediate. So they can't deliver you your coffee. They're trying, but they don't do a good job of delivering you your car. They can't work out for you, so they can't deliver your gym. And that's what we do. We focus on these multi-unit retail and last mile distribution businesses. We have about 12 investments. Our companies in the aggregate do about $3.5 billion of revenue. We have about 900 multi-unit retail locations around the country in all our different brands.
Mm-hmm. Now, you just made an investment in a pretty sizable 7 Brew franchisee. Can you tell me a little bit about that?
Yeah, it's one we're really excited about. It is the second largest franchisee in the system. They have 50 stands in Texas, Florida, Oklahoma. And we're going to look to build 200 over the course of the next several years. It is a brand that we just think is at that great inflection point of having enough critical mass, not only to have proof of concept, but to have really great name recognition. But there's a ton of runway in front of it with a culture that is really resonating with consumers across the industry.
Mm-hmm. So what did you take a look at 7 Brew quite a bit?
We did. We have, as again said, we're expert in multi-unit retail. We've looked at a range of brands across the quick service restaurant and fast casual type space. Just first and foremost, we love coffee and we love beverages, a concept with a ton of operational simplicity. There's high margins, and in the case of coffee, core part of the consumer's daily experience. And there's a real emotional connection to your coffee every day. When we looked at all the different things that make up the sectors we like, coffee in and of itself rose to the top. Within that, the 7 Brew brand to us was just the best in class. It resonates with people. And if there's a place in particular where culture matters to the end product, it's coffee. And Seven Brew has done a good job of really distinguishing themselves with their culture.
Mhm. Now, have you made a number of investments in quick service restaurants?
We are a minority investor, a large Taco Bell franchisee, and we are a large investor in Buffalo Wild Wings, 65 restaurants in California and the Midwest. We are also an investor in a large Auntie Anne's, Cinnabon, and Jamba Juice franchisee. So we've made investments across the sector. We've been reasonably, I would say, quiet the past 24 months. It's just been in part due to, just the upheaval. And in part, we really have kind of narrowed our focus to systems where we really feel as though we can align with a great brand. The operations are simple, scalable, with high margins, and where we see a lot of white space and an opportunity for growth. And that's kind of our most critical screen. And there's just not a lot of those out there.
Yeah. So has there been upheaval the past 24 months? I don't recall that.
I thought you were testing me.
Yeah, no, that's a joke. On occasion, I do that. So I want to ask a little bit about that. What was it? You say you've gotten more selective over the past 24 months, which completely understandable because of the upheaval. But what was it about the environment that sort of led you to kind of to change a little bit like that?
Well, if you take even a further step back, Franchise Equity Partners was established in the end of 2021. Mm-hmm. So we're coming up on our 4th year anniversary. And our first investment was that minority stake in a large Taco Bell franchisee, which is, one of the best in class brands with some of the best in class performance. And you get somewhat spoiled when that's your first transaction out of the gate. But, we looked at a range of different opportunities from the end of 2021 till now. What we saw was when you have these, just top tier brands, you have a very, broad array of participants in a sector with a lot of competition, be it pizza, be it burgers, are two great examples. What happens? AUV growth starts to slow, same store sales slow, the white space contracts, and in particular, margins really become under pressure. And one of the things that we feel passionately about from both a financial and operational perspective is margin really matters. And the market doesn't distinguish enough between high single digit margin type opportunities, 8 to 10%, and something that is, 15% plus. And then on top of it, people get a little aggressive and they combine that lower margin, high operational leverage systems with financial leverage. And when that happens, you get the past 24 months. So, when we talk about narrowing our focus, it's got to start with a brand and a product we believe in. We need to believe that the operations are easy to execute. And the fact that Seven Brew is a, simple, incredibly well organized stand with a very focused menu and high AUVs, it really allows you to operationally scale. And then you combine it with white space. So when you look at all those things, that's kind of what we've gravitated towards.
Mm-hmm. Yeah. I mean, you're also investing primarily in in operators, basically.
At the end of the day, it's both. I mean, that's the beauty of franchising, which is you basically have to find both pieces of the puzzle, but you get to have these great brands, often iconic, with standardized processes and controls. But then on the other side, you get to partner with world-class entrepreneurs, multi-generational families. And you're right, you need both. The brand is necessary, but not sufficient. And, the opportunity to kind of be in both those types of ecosystems all at once is one of the things that, we just find, really, really appealing about franchising.
Yeah. Yeah. Franchising fundamentally is a really good business. I mean, the problem is it's such a good business. So many people are in it. and I think the challenge over the past couple of years, frankly, is that, the upheaval that you mentioned has been harder on the operation side of the business than it has been on the franchiser side. So franchisers are getting, if you're a decent franchiser, you can pretty much write your own. I mean, you can't really, but I mean, you're getting strong valuations, plenty interest, all that other stuff. But that past couple of years has been kind of hard for a lot of these operators to find buyers, unless your name is Taco Bell or some others.
Yes, you're absolutely right. And again, this gets just back to this point of operating is difficult. Like this is a game where you are basically, shaking the couch cushions for nickels and dimes. And if you're running a 10% margin and your labor goes up 2 percentage points, that's 20% of your profit. If you're running a 20% margin and labor goes up 2 percentage points, it's a 10% hit to your net. And that's really important. Partnering with brands where there is growth that allows you to spread your costs and scale your operations, and being in higher margin brands where you're aligned with the franchisor in, sharing the profits, it just strengthens the base. And you'll just find, by virtue of just simple microeconomics, the operators that have had the toughest times are the operators that have been operating in these much lower margin systems. So, again, partnering with these franchisors and brands that really know how to run a well-aligned operation and a well-aligned system means everyone gets to grow. And it's a lot easier to be an operator under those circumstances.
Mm-hmm. So when you're looking to do an investment like this, I mean, since you're talking long-term here, but you probably spend an awful lot of time with the operator and try to build a relationship. Can you talk a little bit about that, about what you look for?
Yeah, no, sure. What we'll say is, 75, 80% of our underwriting decision is the operator. At the end of the day, you need to partner with people who you trust, who are on the ground, who are making kind of the day-to-day decisions on your behalf. And, we can provide a lot of support in different ways. We can provide some certain oversight, much like a board provides. But at the end of the day, when you need someone who's going to make sure you're engaging in the best site selection, going to make sure you have the right labor model, making sure that you have, clean restaurants that people are going to want to visit, and you take care of your customers, that has to happen and has to rest with the operator. Those people are in the stores day to day. You have to have a rapport with them where you believe in them, because they're ultimately, the guardians of, our capital, our limited partners' capital. So having that alignment and having that belief system is really, really critical. And, in many circumstances, from the time we'll first meet someone to the time we'll invest in them is at least a year, because it takes a long time to develop that type of relationship.
I mean, it's that relationship's pretty important in the investment decision, because you're going to be working with these guys for a long time, at least in theory.
Yeah, that's exactly right. And you're delegating a lot to them. And at the end of the day, you just can't do it all yourself. So it really is a really, really important relationship where you need a lot of mutual respect and comfort with one another. We like to say a few cliches. One is you could hire the best lawyer in the world, but they're never going to create an operating agreement that's going to protect you from an unhappy marriage. And that is just the fact. The other thing we like to say is, we have 2 rules in partnering with an operator. 1, it's someone we want to have dinner with, and 2, like, no jerks. Life's too short. So a lot goes into our underwriting decision, but those are our kind of principal rules.
All right. So in other words, step 1 in getting good financing for your business is don't be a jerk.
Yeah, I think that's a reasonable, good rule in life.
Yeah, that pretty much is. So what is it about the Seven Crew, the franchisee in this case? What was it about them that made you decide to make this investment?
So the only other comment I would add to the operator criteria you asked me about is scaling's tough, and you need to have a partner that you believe can scale and has a track record of scaling. And it's one thing to operate one, two, even five locations. It's another thing to operate 50 and try to build it to 250. And what we found in Seven Crew was just an incredible team. Again, first and foremost, these are people we have a massive amount of trust and respect for, people we really enjoy personally, and we think are just fundamentally good people that know how to drive a culture. The second thing is they've built a business that's pretty incredible, and it's hard to argue its success. They were part of the brand very early when it was less proven, and they've basically been able to grow at a pretty rapid clip and basically build stands that have been really successful. And between the real estate and development, the operations, the store opening capabilities that they have, we just thought it was just the perfect platform in a really great system. And quite frankly, those opportunities don't come along all that often.
Yeah. I mean, we talk about Seven Brew's growth a lot, obviously, and it's been incredible going from, basically, just a handful of locations coming out of the pandemic to 460, I think, today. And me saying that, by the time I'm done with the sentence, they probably opened another one. But in this case, Seven Crews, they've gone from basically 0 to 50 in no time. For a franchisee to do that development on that kind of scale, that takes an immense level of money and capability. That's some really hard work to be able to build that many locations as an operator, I think.
Yeah, it's, as I said, it's hard to argue with success, and the proven track record of scaling was something that was really important to us. But again, when you look at the team, they basically have all the elements of success. They are incredibly grounded in the business. They understand the operational complexity of opening a new location. They understand how to launch that location in a way that really benefits the community and creates a greater presence in the communities they're serving. They have an incredible real estate and development platform on top of that. And by virtue of that, it's everything from not only opening the stores, but going all the way back to site selection, going through the construction and permitting process. That's not an easy thing to do. And especially when you're juggling a lot of balls in multi states. And that's the combination of what they've done. And when you add on top of that, Seven Brew in particular has done a great job of providing support for the system so they can execute this quickly. And, the fact that they have, factories actually building the stands for you is just an example to how they've really thought about a real estate, forward strategy. I also think the other thing that Seven Brew has done, which is really smart, and they did this before we arrived, so it is by no means meant to be self-referential, but they have a really incredible franchisee base. And at the end of the day, these are seasoned operators with a lot of capital who know how to scale. And being part of that group and that community also gave us a lot of confidence, because for the brand to succeed, you need everyone to succeed. And you want to be in the company of really incredible fellow franchisees. And that's what we have in the system.
Oh, yeah. You can't, I don't know how many times I think about this, but I think the most important decision in any franchise business is a franchisor choosing the person that is going to operate the restaurant. That is such an important decision, Like the person that operates your restaurant, your franchisees, the people that are out front, they're the ones that are the ones dealing with the customers. They are the ones that are going to represent your brand. They're effectively the face on the ground of your restaurant brand. And so picking really good franchisees is like step one. And it's really, really important. I can't really emphasize that enough. And the thing that we hear about Seven Brew all the time, they have a really tremendous reputation within the restaurant industry. If you talk to almost anybody, Seven Brew is close to, of all growth chains right now, up and coming growth concepts, which I'd still consider Seven Brew part of. The reputation is like through the roof. A lot of people have a tremendous amount of respect for that. And I think that was reflected in the franchisee base.
I totally agree. It's really an incredible group to be a part of. And, at the end of the day, the franchisor-franchisee relationship is incredibly symbiotic. You can't succeed as a franchisee in a brand that doesn't support you and in a brand that's not doing well. And likewise, a franchisee is the go-to-market strategy for a franchisor, and it's the face of the brand. And if they're not exacting the right degree of standards in their day-to-day operations, the brand is not going to succeed. And then when you take that to the next level, where it was going to succeed, but there was still a ton of runway and a ton of white space to go. And what I mean by that is, a decade of white space to go, not just, 18 to 20, 24 months. So you're exactly right. If you don't have a great franchisee base that can execute on that doesn't have the ability to represent your brand well, doesn't have the ability to scale and do the type of development a growth brand needs to do, you'll just be left behind. And again, as a franchisee that's new to the system, being surrounded by all these other great franchisees means the brand is really likely to succeed, and it's going to result in much better probabilities of success for franchise equity partners.
Now, you took a majority stake in this. You seems like you're a little bit agnostic, majority versus minority.
We are about 2/3 minority, 1/3 control, and it's very, very situation specific. Our capital is really, really flexible. We could take minority stakes. We could take majority stakes. We can provide preferred financing, often with or without equity attached to it. And, in this case, we were meeting the needs of some of the exiting parties who wanted to sell more. And just given the amount of development we were going to do and how quickly we were going to scale, we felt as though being in control made a lot of sense. This, system, given its growth, requires franchisees who have really, really deep pools of capital. And we had that capital available to us. We didn't want to be constrained in applying that capital to growth by having to stay 49 versus 51. So just given the amount of money we were going to devote to the system, it just made more sense for us to be a control investor.
Right. And you're pretty certain that Amazon isn't gonna take on the beverage business anytime soon, huh?
Well, they've tried, and they will, in some way, shape, or form, always be there. But there's just a combination of factors where we still think the beverage space is distinctive. One is just the moat from franchise laws. There's just a lot of places selling alcohol. It's hard to be in Amazon's position. And, there's a lot of complicated different SKUs. And, those type of marketplaces, local distributors who know their customers really well and stay close to the needs of their customers tend to serve these brands better. But, it will be a bifurcated industry for a very long time.
Yeah. Yeah. And you're not concerned by, say, the entrance of companies like McDonald's and Taco Bell and others into the beverage space? There's a lot of interest in it right now.
Look, there's there's always a lot of competition. And if you have a great product, you could distinguish yourself. But, you raise a much bigger point to me, which gets back to why we were so attracted to 7 Brew, which is, coffee is a unique beverage. It's not like just picking up a can of carbonated soda. There's a real emotional connection to coffee. I was telling someone the story this morning. I have a fancy espresso machine in my house. I have a fancy Keurig. Yet my wife and I, most mornings, will go out to the local store and get our cup of coffee because we don't have any 7 Brews around us just yet. And 7 Brew does a great job of creating that emotional connection with their consumer. So there will be a lot of folks out there that will jump into the coffee space. But it's not just about delivering the product. You really need to deliver the product in a way that people, really, really emotionally connect to.
Scott, this was great. Really appreciate you joining me this week on the podcast.
Thanks for having me.
And that should do it for this week's episode of A Deeper Dive, which was edited, as always, by Spoons. Artwork by Nico Hines. You may find this and other episodes of the podcast on our website at www.restaurantbusinessonline.com/article/deeper-dive. But by all means, subscribe on Apple Podcasts or Spotify. I'm Jonathan Mays, your host, podcast producer, and the editor-in-chief of Restaurant Business. Thank you for listening.